Hey everyone, thanks for joining us today for our webinar to talk about a extremely timely subject. The title of the webinar today is Tariffs, Pensions, and Bitcoin. And we're going to talk about the role of crypto that crypto might potentially play as this global trade war, which seems to be accelerating, continues to take off, and markets react. So by way of introduction, I'm Jerry O'Shea, head of global insights here at Hashdex. With me is Pedro Lapenta, our head of research. And for those of you that might not be familiar with Hashdex, we're a crypto asset manager. We've got ETPs in Latin America, Europe, and the US as well. And one of our big focuses is to provide education to potential investors and our clients. And that, of course, is the purpose of this call today. We're going to, as I mentioned, talk about the implications from the trade war and the broader kind of macro landscape. We'll also talk about some other things, including some regulatory developments that we think are helping to strengthen the investment case for Bitcoin and other crypto assets. But before we get started, I'll do two very quick administrative things. The first is I'll read our disclaimer, but I also did want to mention that we'll talk here for about 30 minutes or so, and then leave maybe 10 to 15 minutes at the end for questions. So please feel free to submit questions along the way, and we'll try to address them as best we can. So the disclaimer, this webcast is for informational purposes only, and nothing should be considered the official opinion of Hashdex. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. Certain information contained herein constitutes forward-looking statements due to various risks and uncertainties. Actual events or results and the performance of the products may be substantially different from those reflected or contemplated in such forward-looking statements. For any product-specific information, please refer to the appropriate prospectus. Okay, so with that behind us, I'll kind of start. It's a very fast start to the day today, given some of the news around tariffs and China's retaliatory tariffs. So Pedro, maybe I'll start by saying, I think if anyone doubted that we were in the midst of a global trade war, that's probably been put to rest today with China slapping 84% tariffs on US goods, up 50% actually from their original plan of 34%. So why don't we maybe start by, the markets are selling off, crypto assets included. Why don't we start by kind of level setting where we are in terms of potential pain from all this in the markets, and then maybe if you could talk about any thoughts you have on where this all might end.
Yeah, absolutely. Thank you, Jerry. Good morning, good afternoon, everyone. It's a pleasure to be here. It's a pleasure to host you guys for one more webinar with Hashdex. Certainly, it's a wild market out there. We're in the process of reducing risk overall. We're seeing across the markets in any major asset classes, in currencies, in rates, and in equities, in high growth equities, in crypto as well. But nobody knows. Everyone has opinions right now on where these things are going, but the truth is that what's happening right now, I don't think has any resemblance with other times in markets where the leading country had decided to renegotiate its commercial terms, and not only that, I think it's a broader approach, but the US is leading a negotiation with mostly 180 countries. So any opinion that what might happen and what are the scenarios are just opinions, and it might be very wrong or very right. But the fact is that we're currently, markets is seeking liquidity, reducing risks, and I think in the foreseeable future that's going to continue. There's a lot of moving pieces that needs to be paid attention, especially the bond markets in the US. But we're seeing, especially for crypto, because I think we're not, specialists in macro here. We just want to get a sense to you guys how we're seeing the markets from the crypto perspective and what's going on. And And Jerry, I think there are some surprising aspects of crypto prices behavior recently that I think it's worth sharing. And I'll just give me a second because I will upload some of the slides that we put together for this call, and so we can make the point with some numbers. And just a second. You guys see my screen, right?
Yeah, looks great.
So yeah, so we have this slide here, which is some time windows that we like to look at and to compare asset classes globally. And on a year-to-date basis, right, we have a slideshow, a slide go in a few moments where we dissect different time windows. But in this one, we have year-to-date, obviously, a market crash in all major assets, but gold, right? Since actually gold has been outperforming a lot since the U.S. decided, to withdraw or, to confiscate treasuries held by Russia during the beginning of Russia-Ukraine war, and that triggered, a global, fear of, what might happen if we're not friends with the U.S. and that, central banks from all over the place started buying and gold has been the best performing on a risk-adjusted basis due to its low vol since then. Silver kind of in the same aspect, but everything else is performing bad. But what I think is worth mentioning here related to Bitcoin and NCI, and for those who don't know, NCI is the Nasdaq crypto index that our flagship products track, and it's supposed to be the benchmark for crypto assets globally, just like the S&P 500 is for the 500 larger companies in the US, or the Nasdaq 100 for the tech companies in the US and globally. NCI is the same thing. Is performing quite in the range of global assets, and this is quite a positive surprise to us. I mean, given crypto, especially Bitcoin is 15 years old, still an asset maturing, and with much higher volatility than all these other asset classes. Given the circumstances, that the market is seeking liquidity and all that, I think it's quite surprising that Bitcoin is performing this way. And I think it informs us somehow that it's a differentiation among assets at this moment, and obviously for the other crypto assets, especially smart contract platforms, which is the second largest bucket in the whole market cap, mainly Solana, Ethereum, they're more compared to high-tech growth companies, right? So they're underperforming, much smaller market cap when compared to Mach 7, for instance, and much higher volatility. So when you think about standard deviations and market cap, it's kind of expected when have this certain market crashes. But we're going to make the point, and we're going to talk a little bit about what's going on in regulation. It's kind of a dichotomy because a lot is happening that will affect positively crypto assets. It's just a timing thing, especially in the U.S., the regulation in the U.S. So it's kind of expected what's going on with crypto assets. This is another time window that we like to, since the Trump election on November 5th. So in the same window, we're seeing the same thing, but there's a positive note here. Bitcoin is up, some 9%. Gold is also up, which I just mentioned. NCI, which has a lot of Bitcoin in it, given the way that the index is calculated on a market cap weighted basis. But everything else is performing much worse. The negative part here since the election, and this is kind of, I think, it might be an opportunity because everything that's related to regulation will affect the smart contract platforms, the applications, the Solanas, the Ethereums of the world more than Bitcoin, which is already kind of an established digital asset, especially in the US. So we're seeing a lot happening positively in regulation, but prices are coming down. So this might be an opportunity, and that's opening up. I think it's a rare one. Again, when we look at crypto on a longer time horizon, and this is the periodic table that we like a lot when we're talking to clients, when we take a step back and we look at how this new asset class, this emerging asset class has behaved since 2010 pretty much. It's either the best performing asset class or the worst. We know there's still vol. It's part of price discovery in a nascent asset class. But when you compare annualized returns, and we think that's going to continue looking forward, especially the developments in regulation and everything else that's happening. That's going to continue in the next 5 to 10 years. And when you look at it on a compound basis, and you look at the NCI specifically and compared to the other asset classes, it's a huge difference, right? You don't notice that day to day, but when you compound it and when you do it over a long horizon, you can see here on the right left column, NCI has compounded at 130% clip over a very long time horizon against S&P 12, which has been obviously great. And this is a very positive window for risky assets. So the difference is just amazing. And we think it's not going to be the same 130% going forward, but we think there's going to be a decent double-digit return, much higher than the second place. Obviously, there will be volatility. It's part of the opportunity, and I think it's the volatility, if well understood, is your friend. We expect as this asset class gets well known worldwide and gets used worldwide, the returns are going to be fantastic. And this is just a slightly different way to look at it when we bundle up returns, just to see how digital assets are becoming and they're being traded, and they're being treated in portfolios, and most like and when we see it, for instance, since Trump election, Bitcoin is super positive. The NCIQ, we bring here the NCIQ, which is for the US audience, and allow me to just explain a little bit the difference between the NCI and the NCI index. The NCI index is the one that we created first with Nasdaq, and it's been trading for a few years already, and it has more assets than the US version, which is the NCIQ, and that's due to regulation. But it's about to be changed in the coming months. So the NCIQ only has 2 assets, which is Bitcoin and Ether. NCI index, which is used in Latin America, which is used in Europe for our products, has more assets, has close to 12 assets today, and has a less, a not so intense concentration on Bitcoin, Ethereum. But so far that's what the US has. And that also points to regulation, because we are so early in the process of regulation, and we've seen that by being in like close to 8 years in different markets in the world where things are going, and we think that's going to change in the US. And when we see the current status of US regulation, it feels very, very, very early. But the point that we're trying to make here is that, when we bundle up returns and we compare what the other asset classes are performing similarly in these time windows, you see that, it's like Bitcoin is trading just like the MSCI World. MSCI World is the most global index for equities, right? So Bitcoin is trading according as a global asset. Obviously, as I said, there's liquidity concerns in the short term, where people sell everything because they need to be liquid. When you look at different time windows, you'll see some differentiation. And since Liberation Day, and we call it, since April 2nd, it's one of the best performing on a relative basis. It's one of the best performing assets out there, especially Bitcoin and the index. So it's informing us, it's showing us something that the market is starting to not look at crypto as a one whole thing. It's making differentiations, and especially the early stages products, or like Ethereum has 10 years, Solana is younger, but the use cases are still being developed. It's not widely used yet, and this is the opportunity. So they're trading. So this part of the digital asset space is trading more like high tech, high growth companies in the US. And you see Mag 7, for instance, getting a hit. But you have to make a differentiation of volatility, expected returns, the size of the assets. Mag 7 is a 15 trillion roughly market cap, right? Solana is 150, Ethereum is $100 billion, less $80 billion. So you expect like worse performance. So the message they're trying to send here is that market is differentiating. There are some signs here that Bitcoin is seen as some form of a new asset class that can be used in portfolios for tough times. But don't forget that there are very different stages of development and adoption, right? And that's why we're super excited with the future, because it's so early in the adoption curve, and we're going to talk a little bit more about it later on. And this is where, as we were preparing the slides this morning, we came across the Fear and Greed Index for the stock market and for crypto. And today, and then we took the temperature of it today, and Fear and Greed Index for the stock market is at probably all-time low. And ironically, Fear and Greed Index for crypto is higher, and a lot higher, although it's at a low level, which is expected at this point. But it was quite interesting to see the differences between crypto and stock market. I think the crypto people are kind of they expect a higher volatility, so they're trained about it. When the stock market people are seeing the turmoil as a very, very, very impactful. But it was surprising to see this difference. And I know it's hard to say, and it's very easy to say, very, very hard to execute. But when you look at what Buffett has taught us, and it's when there's blood on the streets that it's normally a good moment to invest. I know it's not that, it's very easy to say, very hard to execute. I think we're going to be in, it's opening up a very, very, very interesting window in the next 2 or 3 months for strategic allocations in crypto.
And Pedro, I don't want to read too much into both of these. Obviously, are extreme fear, so I don't want to read too much into the slight differences here, because I agree. I think maybe crypto folks are so used to and have calluses from the volatility that maybe that's why it's slightly higher here. But one thing I think that maybe is worth considering too is this is a different asset class from other asset classes, and if you look at kind of the goal of tariffs, right, is they're directed at physical goods, right? And so this is kind of a country to country thing, whereas, crypto's borderless, that they're not physical assets. They're not dependent on one particular country. So would love to get your thoughts if you think, I kind of separate it out as you have the Bitcoin digital gold thesis, right, as you mentioned, that we might see playing out a little bit more now. But then also just more broadly with the crypto ecosystem, is there maybe a recognition that these are assets, this is an asset class that may not be as impacted by these sort of, big geopolitical things over time? Of course, they're still risk assets. They're going to, struggle when we have this uncertainty like we have right now. But would love your thoughts on kind of over time, if you think maybe there'll be more of a recognition that this is really an asset class that goes beyond just borders, right? Doesn't have controlled by any particular government entity, anything like that. So if you could share some views, that would be great.
Oh yeah, I do think that's what's one of the outcomes of one more financial shakeup like this one, is that people will, will realize that we're talking about decentralized assets, which is a new thing that, that has no influence from outside forces overall, right? They are autonomous, they're anonymous, they're 24/7, especially Bitcoin with, the programmatic monetary policy, proof of work, and all the great aspects of it, and a very predictable supply. And so, I mean, when the world is looking, is seeking real assets, or, or assets that can, withstand the forces of inflation, for instance, right? So great companies normally, the real good companies, they normally can have higher input costs, but they can also charge more for clients, right? A prime real estate is the same. Gold is the same, with a very low growth supply and aspects of reserve. Bitcoin is coming up with the same approach, and we think it's even better than gold. And only think that it's only 16 years old when gold has been around, and central banks are, especially in this moment, more inclined to buy gold because they already understand it. They've been doing it for quite some time, but we're seeing all over the place people looking at it differently now. And this is the great moment in the US, and no wonder why we think, on a relative basis, is performing really well. It's part of, look, there might be something new on the streets, right? So, and when you look at professional portfolio managers, they're looking, they're doing the studies of the correlations, and and trying to, how will I, include Bitcoin specifically into my portfolio, when they see value, they really see value. So, it's one more moment, it's positive propaganda for Bitcoin. It's one of these moments where people are, they see the performance, and they see the value of it, they see the fundamentals, and on top of that, we're in a major regulation overhaul in the US, right? So I would expect, a Bitcoin, it will take some time. I think the market's going to become, they're going to be volatile for a while. Whatever, Trump is trying to do is big. There's tremendous impact. Global trade is super globalized. The supply chain is, fractionalized. People buy from everyone, and so he's forcing everyone to talk to everyone at the same time. So this is going to take time. Nobody knows what's happening. There are cracks in a few spots of the market. The bond markets in the West need to be, paid attention really close. But, I think one of the good positives of this is that it's putting light on digital assets, and people are going to see that, it survived again. It's not going to die. And then you see, like by the price performance, it's there. It's behaving quite well, I think. The rest is a different story, but it's the same approach, Jerry. These are decentralized networks that can run software on top of it. That you can run applications, that you can trade value. You can trade all sorts of stuff in the future, but it's just not there yet. These are high growth projects that are being built. It takes time for the infrastructure to be built. Just like the internet was back in the day, just like any infrastructure project, you build the infrastructure first, and then the application comes, the user comes. So different stages of development. But people are going to see that there's value in this decentralized new infrastructure for computing.
Yeah, and I think we'll talk, I think, about this as we get into the regulatory side of things as well. But stable coins are obviously a very interesting and arguably the first sort of killer use case for crypto, and they may potentially start to take off a little bit more as this trade war progresses. Given that we have the ongoing kind of de-dollarization trends among BRICS and other countries. Foreign government holdings of U.S. treasuries are dropping, but at the same time, these stable coins hold something like 98-99% are USD based, right? And they're buying up treasuries. Tether, the largest USDT, the largest stable coin, was the 7th largest purchaser of US treasuries in 2024. So there's kind of a strategic thing that the U.S. Policymakers are considering, right, and looking at stablecoins, which is one of the reasons why I think that legislation might be one of the first pieces of comprehensive digital asset legislation to get through Congress this year, maybe later this summer, because there is, especially in light of the accelerating trade war, there is I think a strong desire from policymakers to ensure that there are buyers of their debt going forward, and stablecoins have kind of stepped in to, I think it's something like a $230 billion industry at this point and growing. So they could potentially play a pretty significant role as this uncertainty kind of continues around tariffs and the impact of the tariffs to different regions of the world.
Yeah, I mean, that's the probably number one, number two priority of regulators in the US.
Yeah.
There's a great agenda for that. You want to, we have a few slides there that, just we like to, Hashdex is, we've been doing this for quite some time, and the volatility is part of the process. And we always, when we're talking to clients, like to, reinforce, let's take a step back and look where we are, and what are the developments in the industry, where is this thing is going, and when we look at what has happened, the Trump effect, what we're calling, right? It's been a very, very intense agenda, and Jerry can talk about it a little bit. He's been very involved with everything related to regulation in the US. And Jerry, why don't you share a few?
Definitely, and I like this timeline because I feel like the news cycle is so fast these days that sometimes it's good to step back and actually take a look at what has actually happened. And I think a lot of investors are underappreciating the commitment to making the US, this current administration has, to making the US the crypto capital of the world. Like, it wasn't just campaign rhetoric. This is actually happening, and I think on this timeline we have some of the key events since the election that have really kind of established the fact that the US at nearly every level of government is looking to lead in this space, right? And so I think a big part of that, if you want to go to the next slide, I think we have some of the, there's the old saying with government personnel is policy. And if you look at the people that are going to be leading the capital markets regulators in the US, if you look at the kind of senior leaders throughout government, the overwhelming majority of them have either a extremely favorable opinion of Bitcoin and crypto assets, or maybe just a slightly less favorable, not less favorable, but there really aren't any senior government officials that have been critical of this asset class like we experienced almost completely across the board throughout the last administration. So it's been a 180 shift, right? We've done a complete turnaround in terms of how the US government is looking at this asset class. And we've highlighted a few of the key people here on this slide. Each of them, David Sachs, who's a well-known investor, has been investing in Bitcoin for over a decade, and a number of other crypto companies, is leading the administration's efforts on getting to the goal, Trump's goal of making the US a crypto capital of the world. But then if you look at the regulatory agencies, you have people like Paul Atkins, who's the nominated to be the next SEC chair. He's someone that he's advised the Digital Chamber. He was an advisor to the Digital Chamber, which is a large digital asset trade association based in DC, and has a very favorable outlook on digital assets. And in his nomination hearing, I think a couple of weeks ago it was now, mentioned that digital assets regulation is the #1 priority of the SEC. So these things are all happening. I don't, again, getting back to kind of how fast the news cycle moves, and with everything else going on in the world, I don't know that investors are paying a whole lot of attention to this. Hester Peirce, who's leading the crypto task force, she's been really studying this space for over a decade. She was nicknamed Crypto Mom a long time ago because of her kind of passion for making sure that the US gets regulation around crypto right. And then Brian Quintenz, who's nominated to be the next CFTC chair. He has a background in government, was a CFTC commissioner, But right before being nominated, he was also at A16Z Crypto as their head of policy. And so, these are honestly just a handful of folks. Like we could go on. The new head of the OCC, the national banks regulator in the U.S., is used to work at a crypto firm. There are all sorts of people like this that are passionate about this space and want to get it right for the U.S. that are working very hard and very fast to get this done and kind of establish the U.S. leadership. So to Pedro's point from earlier, I think this is something that is, again, I don't think super appreciated by investors, but maybe it is, to the extent that we've seen a little bit more resilience, particularly with Bitcoin, as all this macro uncertainty has taken shape in recent weeks and months. It might be a sign that people are slowly starting to recognize that the U.S. is very serious about becoming a leader in this space. We haven't even mentioned the strategic Bitcoin reserve and digital asset stockpile that the president has created. Again, two extremely bullish long-term signs for this asset class, in the U.S. Taking a leadership role in this. So it's something that, when we're talking to clients, when we're talking to advisors, we just like to remind them of all this work that's going on kind of in the background. If you're not in the bubble that Pedro and I are, and following this day to day, you might not appreciate that these folks are, working behind the scenes, and that this regulating crypto and ensuring that the U.S. remains the leader or a leader in crypto is there's tremendous work going on. So we can, if you want to go to the next slide, I don't know, we don't need to go into, I know we're kind of getting closer to time, and I do want to reserve some time for questions. We have a few that have come in so far, but if you have questions, feel free to send them along now. The SEC Crypto Task Force, a few weeks ago, our team was in DC to meet with them and some other policymakers. And I think our big takeaway, in addition to kind of the things, these 10 key points that they're looking at, our biggest takeaway was just the speed at which the regulators are looking to move forward with their initiatives. I think, coming out of that week in DC that we spent, we kind of all agreed that it was, the work going on is much greater and in more depth than we had previously even anticipated, just from kind of, following from afar. So these are all things that are very strong signals for the case for crypto over the long term. And not to suggest that it won't be a volatile asset in the near term, especially with everything going on right now with the tariffs. But we do think it's important for investors to take a step back and look at the work that's going on at the regulatory agencies and how that's going to impact the investment case for crypto going forward, because it's substantial, and it really has helped us to strengthen our longer term thesis for this investment case as we see kind of this work go into place, and the openness and willingness of regulators to talk about our experiences in the different markets. We've had funds in Latin America and Europe. The U.S. has obviously lagged, and we've been able to kind of share our perspectives on what's worked and what hasn't worked in other regions. We think all these things are just great signs that despite the uncertainty that we'll be living in for the foreseeable future, that the asset class is really set up to perform well over the longer term.
Yeah.
So I know go ahead, Pedro, and I would definitely want to share.
I'll just add a final note on this regulation part, is that the change in mood, the change in approach by the SEC from one government to the other it's like an 180-degree shift, right? And this is the big message. I think if we were having a situation like this with the same approach in terms of regulation from the previous government, we would have been, seeing crypto crash like crash. But it's not the case, right? So, remember, the previous administration, regulation was being done by enforcement, right? It was not productive. In this new administration, it's the other way around. It's regulate to make crypto make the US the crypto capital of the world. And then it's looking at, very broadly. And one, aspect, and then you can all check it, and Hashdex has been part of it. There has been more than 100 meetings with the SEC, with all sorts of different players of the crypto space, all sorts of verticals, so they can understand what's going on and prepare for this phase of this 10 points. And this is also this 10 points that we bring here. This is a public document that was put out by the crypto task force has their piece, and to kind of guide the markets. Look, this is what we're looking at, and this is what's going to happen in the near future. And when you look at the breadth and the depth of stuff that they're looking at, it's like, all right, they're taking it seriously. So that's why I think it's super positive. It takes time. We're in a market crash, mostly for liquidity. Bitcoin especially is trading, I think, pretty well. In this environment. The rest obviously is a different stage of development. It's more like tech. It performs, worse, a little worse. But when you put it in context, of the size of these industries and the market caps, the volatility and the past returns and the expected returns that we think are going to come, it's all within normal conditions, right? So I think Jerry, you mentioned about the strategic reserve. Obviously, with all these news, it's just to pinpoint that this is just really, really important. Imagine what happens and when this gets approved, and other countries look at the US and say, like, look, they're doing it. If we don't do it, then we're going to be behind. So I think this is also very, very important. And just to finalize here on how we see this, it's pretty much what I just said, right? This major regulatory turning point is in the process, is in the making in the US. And we know the US is the largest market in the world, the largest capital market in the world. Once they decide to do something, they do it correctly. So we're super excited about it. What Jerry alluded to in the process, in the call here. Crypto may be a building block of a multipolar world. We might be entering, with many countries with strength, not only the US leading, but crypto networks, decentralization, neutral, permissionless, borderless, and all this. This is going to be probably, it's the moment that, this technology has been waiting for. And lastly, and it's part of us being in the process, for quite some time, seeing this industry, coming from zero to close to $3 trillion of market cap. Stay disciplined in the moment. Don't do crazy stuff. Don't invent. Don't leverage. Take the long-term view, which I think is going to be. We might be in one of the greatest opportunities to buy at this prices. If we're right about what's going to happen with this industry going forward.
Yeah,
so I'll stop sharing here now.
Oh yeah, I was just going to say, like a level head during periods like this is just as important as periods where we've got the crazy price appreciation, like we saw kind of late last year, earlier this year. And so taking a long-term approach to investing in this asset class is something we've always encouraged our investors to do, and obviously with price movement like we've seen recently, there is potentially some great opportunity as well. And so I know we've got just about 4 minutes left, and we have a handful of questions. Pedro, I might combine. There's a couple here I might combine because they're kind of similar, but essentially, the question is: will Bitcoin store of value thesis actually come true and decouple from risk assets? And as kind of a corollary to that, will the regulatory work that's going on be kind of offset by the negative impact of the tariffs and the trade war?
Yeah, I think there's a very good chance that the Bitcoin store of value thesis will be well understood at this moment. But this moment is going to last. I think there's going to be a few months still, looking forward of high volatility, people trying to understand what's going on, what the impacts, what are the probable scenarios, what the reactions are going to be from other trading partners, what the negotiations is going to, unfold, how they're going to unfold. But remember, when we looked at the different time windows, and when you see the price performance of Bitcoin specifically, there has been already a decouple from risk assets, I think, right? Like since Trump election, Bitcoin is performing super well. It's close to 10% up. So is gold, right? In the same approach. All the other risky assets are down since Trump election. Okay, since Liberation Day. And again, we're living in a world of excess information, 24/7 Twitter with AI. So there's all sorts of, excess opinions on everything. But we've only been, few days since Trump, came out with his tariffs approach, and it seems like it's been months, right? but there's a lot to be unfolded yet, and markets, measured by fear and greed index that I showed to you guys, is at an extreme fear point, and that normally translates to emotional markets, right? People like getting redemption, people reducing risk. They're not looking at prices. They're not looking at fundamentals. It's the same approach, and in every single crisis is the same, and every single market crash is the same behavior. It's no different here. But again, it seems to us that there's been already happening a decoupling, especially Bitcoin, in relation to other risk assets, and
Yeah. Oh no, I was just going to say, and I think it's very possible. If you look at kind of in Trump's first administration, there was tension around trade as well, and the kind of level at which Bitcoin sold off then compared to now, I think is a clear sign that this asset is becoming much more institutionalized with the ETFs, and broader institutional adoption, right, which will also help kind of ensure that there's not the kind of radical price swings that we might have seen 5 or 8 years ago.
Yeah, and obviously gold is a different beast because central banks can purchase it at large scales. Central banks don't purchase Bitcoin at large scales yet, but I think we're going to see more and more coming. Central banks move all over the place considering buying Bitcoin. But Bitcoin itself on an institutional basis is not available yet in several financial hubs in the world, right? So you have all these differences in access and institutionalization yet in different markets around the world. But I expect the story to happen in the coming quarters and years, and this crisis is a great propaganda for Bitcoin. I hope performance continues this way on a relative basis, and we're seeing some bids 75, 77, 80. This seems to be a stabilized level. Tough to call. As I said, fear and greed is super high. People are trading emotionally, and it's the uncertainties are still high. But it's a good sign. I think it's really a good sign.
Absolutely, and I know we're at time. I did want to mention that we just this morning posted a new article that goes into some of the issues we talked about in more detail. That's on our website. So check out our Insights Hub at hashdex.com for any of those, for that article and anything else. I know we have the quarterly market pulse that's coming up as well for the first quarter. So follow us at hashdex.com. But in the meantime, please feel free to reach out if you got questions about these markets, and really appreciate everyone's time today. Thank you. And thank you, Pedro.
Thank you, Jerry.